There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. Great to be here with you on RBA Day. It is the 12th, actually, of August. So what did the market do? Well, mid-session hit an all-time high. So there you go. That's the CIBA Australia Index, up by 0.6%. We'll keep an eye on the S&P ASX 200 to see if it will reach and finish at a record high. So all eyes on the rates reset, 25 basis point cut, bringing that rate to 3.6%. On the record, remains to be seen whether or not we finish there. We'll keep you posted. And some of the reports that were out today really did resonate as well. Life 360, the best performer in percentage terms. You know what else did well? Consumer discretionary stocks. So yes, because we will see that interest rate cut, putting for a mortgage of $750,000, about $111 into your pocket each and every month. But also JB Hi-Fi soaring in the wake of its result yesterday. So recouping some of yesterday losses, the brokers really positive on that one. Let's get to the banks. We've got CBA reporting tomorrow before the bell, up by about 0.5% today. All those banks, look at ANZ, up by 2.25%. So let's get to quickly some of the top stories, of course, related to reporting season. SGH posting a 9% rise in full year net profit to $924 million. However, we saw the outlook disappoint, shares down 8.5%. Seven West Media, meantime, says that it will intensify its focus on streaming to offset its broadcast results, shares off by 5%. Life 360, 8% higher, strong quarterlies, and co-founder Chris Hulls is stepping down. I wonder if it would have performed even better if that wasn't the case. Whitehaven Coal leads the pack of big Aussie coal miners. Coronado Global Resources seen its profit slump. Share price up, though, by close to 8% today. Vulcan Steel forecasting net profit between 14 and 16 Kiwi dollars. Its share price was down. And Star Entertainment has sold a 50% stake in its Brisbane resort. Southern Cross Electrical Engineering renewing over $110 million in services and manufacturing contracts. And Umedia has appointed James Taylor from SBS as its new MD and CEO. Meantime, on the brokers, Audinate has been downgraded by Jefferies to a hold. And boy, that really did hurt the share price, down by 9% to $5.86. However, I'd like to get to the big picture with my guest in studio, Martin Crabb from Shaw Partners. It's a date between you and I on RBA Tuesdays, isn't it?
It is, yes. Once a month, or typically once a month, we get to do this. Ruby Tuesday or RBA Tuesday?
Yeah, I like it. And so the RBA did what it was, how do we phrase it, supposed to, expected to today?
Yeah, they met expectations this time, unlike last time. So just listen to the presser there. So lots of questions about productivity, but the language in the statement, you always compare this statement with the last one, look what words they changed. It's still a little bit dovish. It's still saying that there is potential for a bit more weakness in consumption. So we're still taking a data-driven approach. And she did say their forecasts are for interest rates to continue to come down. So their base case is, I think she mentioned 2/3 more rate cuts, which is kind of where the market is. The market's pricing in terminal RBA cash rate of 3.1 or slightly below 3.1 going into next year. So we've got a meeting in September, Nadine, which they probably won't do anything with. They'll wait for more data and they'll probably move on Cup Day. That's kind of seems to be the consensus view. And then the door is open for another rate cut in February next year, should they need to do that. If the economy continues to track towards 2.5% inflation and 4 and a bit unemployment, which is what they're thinking, we should get cash rates to neutral, which most people think is low threes.
Mm-hmm. So maybe we should have some champagne on Cup Day if it indeed gets cut again.
Yeah, you might get a winner and a rate cut on the same day, right?
All right, so the market is sitting at 8,880, up by 0.4%. Really interesting because that will be a lifetime high.
Yeah.
I was asking all week, is this rate cut because it's so expected by the market? Is it already priced in? And I was getting a few, probably.
Yeah.
Well, apparently not.
Yeah, well, there was a little tick down in the currency, and then it just rallied all day. And I think the market did say, given that we were completely surprised last time, you can never rule anything out. So there was probably some outside people going, well, given that the market will get absolutely smoked if they don't cut, I might just hold back my buying and just wait till 2:30. And if the cut comes through as I expect, then I'll just do my buying. So you saw on your chart there of the SIBO, it's just rallied into the close and people bought the banks. So they're the interest rate sensitive parts of the market. So maybe there was some people with an over the day order in the banks, and just around about 2 o'clock they just go, I'll just hold off a bit, and then as soon as the rate decision comes out. So does that mean we're going to gap materially higher on this unexpected rate cut? No, but it's just one. One of the stories of this year is that the PE of the market's been going up because risk has been coming down. Ever since April, risk has been coming down, volatility's been coming down, credit spread's been rallying. And we've seen this sort of risk on sort of behaviour. And the market this month is only probably up 1%, even though it had a move today. But there's a lot of churn in the market. You can see on there, insurance stocks down almost 6% this month. And materials driven by things like lithium, what a day that had yesterday, right? Amazing. So, there's a lot going on under the surface.
And just on a couple of those points, I had Suncorp featured on the call today with your friend Philip Pepe from Shaw Partners. Name drop there, and it was a sell for him. QBE's, I think, result last week really, made it clear that the days of these ever-increasing premiums are over.
I hope so. I don't know about you, but I'm
Personally,
sick of getting house and contents, car, health, all the insurance just keeps going up and up and up. And I'm not using any more of it. It's just becoming more expensive. So, I think we've reached the peak of the hardening cycle, as they call it, with insurance.
Peak premiums. And then does this lithium rally have legs in your view?
I don't think so. I think the market's just very, very short these names. If the lithium price stays where it is, a lot of these companies really struggle to make any money. So I think there's a big short position right across the sector. And I think that decision by CATL to shut some of their lepidolite mines, only 3% of world production and probably not going to be out forever. But I think it's just the message it sends. So we're at the bottom. The question is, how long is winter? It might be a Stalingrad sort of winter, or it might be a Sydney winter that's quite short. So it's difficult to know. But obviously the rally that we saw yesterday was dramatic, just showing you how much short interest there is in some of these names.
Okay, so today the big result was Life 360.
Yeah.
I'm surprised that it rallied as much as it did.
Yeah, well, it was positive right across the board. I think the people took the new CEO, the CEO succession as a positive. So quite often when you get a founder stepping down like that, it's this is not good. But I think the incoming CEO, whose name just escapes me briefly, Lauren.
Yep. Sorry,
Lauren
me too.
something.
And
Sorry,
I said
Lauren.
to one of our producers, her name doesn't matter as much yet. It will soon.
She's got a great pedigree. She's ex-Microsoft and GoDaddy. So she was well received by the market. And the fact that the co-founder is not leaving the business, he's just taking an executive chairman role. Their subscription numbers were great. Their guidance was better. There's a lot to like about that. And this is a stock that's pretty hot. It's up 50 or 60% since it went into the ASX 100. And it was up another 10 today. So this is a very well-loved stock.
Now, on the flip side of things from results today, SGH.
Yeah, so Seven Group, it's a bit of a grab bag of things, right? You've got Beach Energy, you've got Boral, you've got Caterpillar or Westrac, and you've got Coates Hire. So there's this grab bag of industrial businesses in there, and you've got the media stuff as well. So it's a real conglomerate, and the reality is that some of the conglomerates performing very well, which is Westrac and Boral on the building materials side.
Yep.
Unfortunately, Beach Energy, they had a big downgrade to production when they came out a couple of weeks ago or a week ago. Then obviously Coates Hire is also struggling. So, even though some of the parts of that business are flying, other parts are poor. So they sort of they effectively downgraded the market by about 5% in terms of their FY26 numbers. And that's why you saw the stock sold off today.
Yeah, so what does this say about this conglomerate model? I mean, it works well for West Farmers, seems to work well for Washington H. Soul Patts. Is it just the mix there's always going to be something working against it when it comes to
Yeah,
SGH?
it's a tricky one. I mean, they have acquired pretty well. I think if you look back at what they've paid for these businesses and what they're generating out of them now, they've been pretty good. And if you look at the performance of Seven Group in total, it actually has done well. I mean, I couldn't give you the return on capital numbers for it, but I imagine they're quite good. The thing is, you're just not going to get all of these businesses firing at the same time. Mm-hmm. And obviously, with the building market starting to pick up in Australia, this is one of the few building material stocks left in the market that's not a US building material stock. You think about Reliance, Reece and Hardy's, they're all US building stocks, whereas Seven Group's probably the only exposure you can get now, maybe BlueScope a little bit, but CSR's gone, Boral's now part of Seven Group, Adelaide Brighton's gone, so it's kind of hard for investors to get into that industry, and maybe Soul Patts with Brickworks. So I think you're never going to get all of them firing at the same time, and they are cyclical businesses. They're not like Coles and Bunnings and these sorts of things in Wesfarmers. So it is a bit of a mixed bag.
Got it. Now, is there anything in particular in the next couple of days? I mean, obviously we've got CBA tomorrow. We're going to be speaking with Matt Common. What would you want to know from Mr. Common?
Oh, I don't know. I mean, I always look at how the market's pricing that stock and think, wow, are they really that good?
Yeah.
Are they really that much better than the competition? Because if you look at the competition and how it's being priced by the market, CBA's been given this massive premium, and is it really that much better than everyone else? So, I mean, obviously the thing that everyone's talking about in the banking sector is credit growth, are there any bad and doubtful debts? I mean, there obviously aren't any. What are they doing about work from home? What opportunities does AI give them to take costs out of their business, et cetera, et cetera? So I think there's a few sort of longer term themes that I'd like Matt's point of view on. So.
All right, yeah, those are sort of in my thinking as well. And also we've read a lot lately about how ANZ is cracking down, how Westpac leaders are cracking down, like where CBA sits in terms of that, and is that bringing the fight to them? Also Macquarie. So it'll be an interesting interview. I hope you take a listen. I will make sure I touch on some of those points. Thank you for today. Really appreciate it, Martin. I know it's a busy day, especially in reporting season. And we had the NAB Business Survey. Didn't even get a chance to speak about that, but business confidence improving slightly. That's Martin Crabb from Shaw and Partners. And as we discussed, Life 360 was the stock of the day. Philip Pepe joined me, and Scott Phillips from the Motley Fool.
If you're a true believer, if you really can compound for years at this sort of rate, then the PE need not scare you. When you're already a $6.5 billion valuation, what is a relatively niche-ish kind of market, people age out of the use of this product over time. The kids get older, frankly. So it's not necessarily got the stickiness or the long-term customer value that maybe some of the bigger platforms have got. It's much smaller though, so plenty of upside. I can't bring myself to buy it at 160 times earnings. I have to say, look, if you've been on that ride, you've done very, very nicely.
Their phrase, not mine, the anxiety economy. They're exposed to the anxiety economy, which is getting bigger, not smaller. Their total addressable market is probably growing. I accept Scott's point that you grow out of this product, but those kids then go and have kids. So even though they're probably not having 2.2, they're probably having 2.1 or 2.
They're also trying to move into sort of aged care stuff as well.
So there's and then pets. There's still the total addressable market is growing. It is not a cheap stock. It was not a cheap stock yesterday. It really smashed consensus. It's above the top end of the range, and they put out an upgrade. History tells you you hang on to winners when they upgrade.
All right, that is Stock of the Day, Life 360. Let's take a look at some of these after-close leaders. Look no further than 360 at $40.82. Car Group after yesterday's result at $39.13. Light & Wonder putting on close to 6%. JB Hi-Fi and IAG. Okay, IAG yet to report, up by 4% today. There is the worst performer being Seven Group Holdings, SGH, and a bit of give back when it comes to Liontown's Lithium Boost, Clarity, and Digico Infrastructure REIT giving back some of yesterday's gains, as is IDP Education. Small to mid-cap space, we've got Star Entertainment on the news of that 50% stake sale of its Brisbane resort. Veeam as well. It got some sort of a defense contract. I meant to look into that further. I might give them a call tomorrow. Anything with defense in an announcement is going to do well, I dare say. Flipping the page to some of the laggards, and we've got Ioneer off by 9% to 13 cents per share, and Challenger Gold shedding 8.7% to 11 cents. Now tonight we get U.S. consumer price inflation. So that's a big one. That's inflation. What will tariffs say? How will it impact the Fed? We also get the U.S. NFIB Small Business Optimism Index and the U.S. Federal Budget Balance. That will be a scary read. Tomorrow we do get the wage price index here locally, as well as lending indicators. Not much on around the region tomorrow, on the economic front at least. And don't forget, we'll have plenty of results, including CBA. And we'll be speaking with Matt Common, and we'll bring that to you at about 3 p.m. So here's a look at the CBO Australia Index. We have seen the S&P ASX 200 closing up by 0.4% to 8,880. So looking sweet, looking like a fresh record. And yeah, it's all systems go. This bull rally still intact. And we will continue to see how earnings here and offshore play into some of this optimism. Look, we have had a busy day here. Looking forward to another busy day tomorrow. We hope you can join us at 9:30. You can catch up with any of our content throughout the evening and into the morning on ausbiz.com.au. Thanks for joining.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.